This is the upper neckline, and this is the current neckline in which we're trying to bounce above, and we would expect to do 50% of both necklines, 154.5. Let's remind ourselves for a technical picture. So we're selling at against top of level internal one here and higher degree one. It's 154.49 or 154.5. We even have potential to sell below level one, comes in at 155.6. We will try and get in at 155.4. For instance, that's what we were showing on these projections and on the technical picture. We all remember this for our chart. Okay, so this is related to the weekly chart again. On the weekly chart, we expect this rejection at over both levels, and we're going to test as close to that neckline as possible. 148 or 149, 148.97 is shown here. There's currently a traction into that wave 1, 2, 3, and then the market's going down to test this neckline before it does a second shoulder to the right. You're seeing head and shoulders at the neckline. It is possible, of course, after testing that neckline that we move higher if the technical picture will change for sterling as a whole. If not, then this ending diagonal would break lower to test boundary of the top of one here. Even at that point, we still retain the bullish picture because we're at the moving average with bounce at 144. We're seeing inverted heads and shoulders. That would just be an inverted right shoulder, and the market would retest the neckline. So anyway, the most immediate move is the one that we want to get in, and that immediate move is a bearish move. Is a 1-2 internal 1-2. This is now a 3. Any corrections against level 1 here, all right, should be sold all the way down to 149.22, maybe just lower. So this takes us to more details on the 4-hour chart. So that is that 1-2 that we're seeing here. That is that 1-2, or even that 1-2. There's an internal 1-2 anyway, so that is that high degree 1-2, internal 1-2. This is 4-hour chart now, not daily. The market has done a 1-2 and a 3-4 and did a very clumsy 5 to this red neckline. We're right now below that neckline at this dashed gray line, bouncing out of the top of a 1. Okay, so the bounce, unless it shows strong momentum, we're really bouncing out of the top of a 1. If we get to see strong momentum, we could consider a buy into 154.9 and 155.4. If we do not see strong momentum, then we have to assume that the market will barely do 154.4, and we would want to sell 154.4 and 154.9. These levels are equating with these left shoulders to the right. At that point, we're having that first of maybe several right shoulders. We sell, we go down all the way to, we bounce at the top of a level 1 here now, or bouncing at top of level 1 here now. We go to the next level 1. Next level 1 probably takes us to 150.5 and 150.7. We have 150.76 here as our breakout low. Okay, we bounced at 151.54 is the breakout low for the current month. Let's take a look at the bounce itself. So we don't need these fibs now anymore. 152.36 is a bit high, 50% above the breakout low, so it's still valid that there could be some kind of a bullish picture. Anyway, so long as we're having, of course, negative momentum on the 1 hour, and let's check the 4. And the 4, the market is a sell. Even if we make an entry and this at these upper levels, 154.5 and 154.9, and the market is bullish, which will give us, it will reject lower and give us grace and room to collect profits or get out before it continues higher. So next week we will check the momentum picture on the 15 minutes, project entries, sell at pivot levels. We're looking, of course, at any level that is, this is the monthly pivot, any level that is below the lower noise band for the month. Lower noise band for the month is 155.4. So probably sell the breakout high for the week. Next week, that breakout high should be below 155.4, irrespective of how long or how far the correction does. We sell the breakout high for the week and the fluctuation high, and we go for 150 levels and 149 levels. We can see, of course, the technical picture here on the 4-hour chart. So again, we're selling now. There's a correction. We did a bounce out of level 1 here, that higher degree level 1, exactly just at the neckline. We could expect to see 154.9 maybe at the most. Anything that is below 155.4, this red arrow here, level 1, is a sell. All of this is simply a correction floor. There's a 1, 2 here, there's 3, 4, that was a 5, so we can now even test level 1 in red. Alright, I believe we have come to an end of questions. So if you have any issue that you wish reviewed or revised, we really have come to an end of issues, I expect, yes. If you have any issue that you wish reviewed or revised, or any questions, please make a note to the moderator, and we still have some time to go over them in detail before going on to the weekend. Alright, so it seems that there are no more questions left out or any issues that wish to be revised. Okay, so going into the weekend, we would remind ourselves again not to carry profit across the weekend. If we have profitable positions, we really would want the market is CFD markets, or unless you are a long-term or intermediate to long-term investor having deep pockets, you would consider to let profits run. For short-term and speculative, or let's say intraday traders and short-term traders, it is in order to show good results and in order to actually be in profit, you have always to consider that on a weekly basis you want to crop your profits. Crop means that you want to take part of your profits off the table, at least half size if you have good profitable trades running, or don't be greedy, take the full profit off. Short-term trading is really best suited for CFD markets. They're very volatile and they're very choppy, and you always are able to get into the trade several times and collect yields, we call them yields, instead of long-term profits that would actually overcome what you would probably collect in, sometimes, not always, but you would collect in the longer term horizon. Okay, so to recap for what's going on today, that dollar trend is still strong. It will probably continue into next week and until the end of the year. So we always would want to be on the right side of dollar longs, whether it's United States dollar against the yen, against the Swiss franc, and short the measures, euro, sterling, and the Canadian, even dollar against the United States dollar. We're best suited if we're always going in at half size, at lower or market levels or adequate levels that we'd expect to see on an intraday basis, and we're reserving our remaining size should we ever come, or whenever we come to see some kind of an intermediate term weekly trend, so that we can add and improve our shorting average. All cryptocurrencies are doing now leg C. It could be that they will just, this leg C in correction will be concluded against the weekend. So we could consider that we would want to enter into Ethereum and Bitcoin at 57,000 or 58,000 for Bitcoin, half size again, if possible, before the weekend, and for Ethereum at 4,450 before the weekend. If you're not comfortable with the entries, you could wait, of course, until early next week. It's always prudent to do that. It's possible that the correction will continue into early next week. We just need to be prepared for that correction. If it does continue, we're staying the next leg up in the market as early as actually across the weekend. That's our take on it. All right, so I believe that brings us to an end of our analysis today. It's really been great having everyone with us. I hope you all enjoy